Hi, folks. This is Lee with the Market Sense for the week of November 11th, 2020. That's Election Day, folks. The charts in this presentation are from the Trade Navigator software, and that's produced by Gettess. And we're going to look at a weekly bond market chart here. They are acting like they want to break down, and I quite honestly just don't believe them. We got an exhaustion bar here a couple weeks ago, which they turned right back up, but then slammed into the middle moving average and came back down to close weak. And this week, the same thing. They started up, but they've turned back down again. I just don't see how this market can break down when the Fed is so bought into keeping interest rates low. Of course, we still have this huge range going way back here on this side of the chart that I said would define the rest of the year, and it's done that easily so far. But I don't even think they'll take this out. I just can't understand why they would break down, and so I'm kind of expecting them to rally back. But again, it's election night. God only knows. What we're looking at, that's 171.03 is the projected low here potentially. I don't think the bottom moving average makes any difference. I think 173.22 is a possibility for resistance, but I don't see a reason why they can't go to 175.10.11 up in this area. Hell, there's no reason they can't go anywhere. Again, the election, I can't tell you how they'll react to the election. But that's what it looks like to me. I just kind of don't believe they're as weak as they look. They look weak. And so if they break down, I'll go, well, duh, they looked that way. But I don't think they will. They shouldn't. They shouldn't break down. I expect to see them go back up. Now in stocks, I want to point out that on election night 4 years ago, the S&P dropped well over 100 points from the close and then wound up closing up on the day. So when I say anything can happen, I really do mean anything can happen. Last week, we got an exhaustion bar, which they have reversed back up. The normal target when they reverse back up should be this area right here, which is that red line moving average is 33.53. If they can get stronger than that, the first target is 34.15. If they really like what they hear from the election returns, they could come up close to 3,500 here. I think that's 34.94 up in that vicinity. If they dislike it, we're looking at a projected low here around 31.86, but no particular guarantee that that'll hold. Um, again, ask me to predict the election results. I'm simply don't have that kind of talent. I'm just going to watch and learn with the rest of you and try to watch those areas and see how they behave. Similar thing really here in the SPY. Uh, just looks almost like the S&P. This is the ETF that tracks the S&P. In fact, same situation after the exhaustion bar turned back up. We're looking at support possibly as low as 318.43, but this area right here is 33 it's 335.40. That's what they were likely to get back to. Um, and 341.37, 348.78, anything's in play. I would normally do the QQQs, but again, because of the election, it's kind of foolish. I'm just throwing out numbers and no real expectation of what they'll do. It just all depends on how much they like what happens in the election. And honestly, I don't know who they'd like more. I don't know what outcome they'd like the best. Actually, I suspect it's one party in the White House and one party in control of Congress is what they like best. Don't know if they'll get that. Don't know how they'll react. So